Welcome back, and joining us with his take on today's market performance is Phaswane Mphahlele from Makwe Fund Managers. Phaswane, thank you so much for your time this evening. Let's start with what is moving markets at the moment. We are seeing a rebound in trade, but still, choppy. And also talk to me about activity that's playing out in the bond markets. I saw that Chinese regulators are urging banks to reduce their exposure to U.S. treasuries.
Afternoon. Well, when we look into that market, there's a lot of caution that is still in play because a lot of focus is on that US data coming through. We've got the likes of the retail sales that reflect that they are muted. The consumers are not buying any big item purchases, but investors are looking forward to, the likes of the labor number and the inflation number, and expectation if still holds that the direction of play is lower. They support the likes of interest rate expectations to rise in terms of cuts from 2 to 3, and they supported the likes of gold that supports the likes of our markets,
Yeah.
and that's what we're seeing some support going up in 0.5. And when we talk about that China move there, yeah, China, it's not a big place. China's
Okay.
been reducing the capacity there. So having to hear about it now is just something that is still in play because we've been seeing them reducing it, increasing it into gold.
All right, so not much of a market mover on that front. You mentioned economic data, and I want us to zoom in on the retail sales figure, of course, coming in flat. Are there any concerns there? Are consumers under pressure? We've been, talking about a very healthy U.S. consumer across 2025. Banks, when they're out with results, also pointing to a strong U.S. consumer. Are they under pressure? Are we starting to see some of that pain coming through? Or is this just, a blip? Especially considering that this is the December period, right? Where you expect consumers to shop more.
Yeah, well, one would expect to see some
Yeah.
uptick considering the seasonal period, but it looks like U.S. consumers are taking it easy on these big item purchases, and they are doing a wait and see to see what other things Trump can offer for them to feel more free to be spending, whether it's interest rate cuts or from a policy front. But it's a December number. We come from noise in terms of data from the U.S.,
Yeah.
so we'll have to let it filter out through into the new quarter. But just they remain resilient. That's one key thing we can take away from that they still hold spending regarding discretionary spending.
And it will be interesting to see, as you mentioned, those labor numbers out tomorrow, as well as the inflation print out on Friday. Let's move over to earnings still coming through. Looking at Coca-Cola in particular, what did you make of that? The numbers quite mixed. Weak revenue for the fourth quarter. The outlook for FY26 also not looking great, but we did see a beat when it came to the bottom line.
Yeah, we know when you correctly say it's mixed numbers, but they remain solid. When you look at the earning front, they beat expectations. That did well thanks to those price increases. But we saw some soft pressure coming from the revenue side. Demand flattened a bit. That should have impacted them, but they still well supported by margins and cost controls. And then they are seeing some recovery in terms of volume in their key markets, whether you look at Northern or Latin America. And yes, some consumers are moving into spending more towards those likes of Coke Zero, those
Yeah.
portfolios around Coke Zero and premium branding, but it's not broad based, and it's therefore you can also see it reflected in their in terms of their outlook, missing expectations. So there's still more work to be done, but remains a solid defensive company there.
Bringing it back home, I want us to dig into Pick n Pay's trading update that was released yesterday after markets closed. I think the last time I checked, shares were down over 8%. It seemed like the company's turnaround plan was, starting to bear fruit, but here we are. Now it looks like it's hit a snag. Does this speak to a consumer under pressure? Does this speak to perhaps margin pressure as we are seeing soft food inflation?
So it's some consumer pressure is filtering through because you can see the guys made some progress
Yeah.
operationally. We've seen the like-for-like stores are looking positive, and demand is stabilizing. They got support from the likes of Boxer, but when you come to that earning, that's what disappointed the market, and we saw that big drop because they were disappointed that revenue is lagging. But it's for the fact that the guys are dealing with a tough consumer environment and very competitive when you look at their competition and the impact of those some some of their closure of their stores that continue to put a drag on them. At this point in time, to even see some form of re-rating around that stock, the guys would need to prove themselves when
Yeah.
coming to the sales for like momentum continue to build into this new period, and those costs coming down and closing that earning gap to turn positive. But it's a wait and see for now.
And quickly before we get into your stock pick, any thoughts around the Bidvest Bank, Access Bank deal falling through?
Jeez, I didn't see through that one. You got to forgive me for that one.
Okay, okay.
Can't comment.
All right, let's then move over to your stock pick. Where are you seeing value at the moment?
Well, I'm gonna sound like a broken record, but I'm still in the gold counters. Taking up some opportunities in the DRD gold. We're still quite in a cycle where the gold continues to outperform even versus tech. You can even put that up there. And currently we've seen our buying opportunities coming down. The likes of DRD stand out. They've shown that they can provide quality earnings. They have no balance sheet risk, and from a risk-adjusted point, with these recent buying opportunities, I'll take a bet there.
All right, let's leave it there, Phaswane. Thank you so much for your time and taking us through trade this evening. Now, that was Phaswane Mphahlele from Makwe Fund Managers.